Let's now take a closer look at Nvidia. To help us do that, we are joined by Michael Collins, the CEO of WinCap Financial, as well as an adjunct faculty of economics at Endicott College. Michael, thanks so much for being here. Let's start off by saying that Nvidia just reported third quarter earnings, a beat on the top and the bottom lines, a 94% sales surge year over year. That's about $35 billion. That's pretty astounding any way you slice it. It's less than the 100 and 200% figures that we've seen, but still amazing. Still, the stock whipsaw. Do you think investors are just too demanding? And what were the contributing factors that helped propel another growth quarter?
Yeah, well, before we went into earnings, the options market was implying a 9% move on that stock, and we saw really a muted return today from Nvidia. So I think maybe the market may be asking for too much too soon. Nvidia is effectively sold out of all these chips, and they have quite a backlog to deal with. So it's more focused really, around 1 to 3 years earnings out, the way the growth numbers are projected, than just quarter by quarter. Some of the biggest drivers in this quarter, obviously AI and data centers, followed by, demand driven by cryptocurrency as well as gaming.
Mm-hmm. And Nvidia's market cap is already over $3.5 trillion. How overvalued do you think it is? How does it sustain its leadership position? And who are the biggest competitors on its heels, do you think?
Yeah, so as far as overvalued, that's still up for debate, right? But there are lofty growth expectations built into this stock. So, I'm always skeptical of any stock that trades above 8 times sales. I believe Nvidia trades at over 30 times sales, which means it's going to be a high hurdle bar with not too many speed bumps in the road for them to get it right from a stock perspective. As far as competition goes, there really isn't much in sight yet, although AMD, a potential competitor, and also Intel if they could ever get their act together.
Yeah, but they're still ways off from where Nvidia is. Now, gaming revenue also climbed 15%. How does that sector fit into its overall strategy along AI and the data center advancements?
Yeah, well, with the video game chips, they have a new suite of chips coming out next year. So they beat for the gaming sector this quarter. They guided a little slower into next year until their new round of gaming chips comes out. And that's some of the reason for that guide lower on the gaming side, because usually when something new is announced, the old product tends to sit on the shelf a little bit longer.
Yeah.
But gaming is going to be huge too. I mean, the prospect of cloud gaming is just getting larger and larger, with more of the data crunching done off-site instead of on the consumer console.
Michael, what should investors expect from Nvidia's Blackwell chip? CEO Jensen Huang was singing the praises of this next generation technology, saying demand exceeds supply.
Yeah, the Blackwell chips will be a huge hit. There have been some stories about them overheating, and that's causing some delays. That should benefit names like Supermicro, but they're in a whole pot of hot water of their own. So I think there's opportunities around AI plays, but Nvidia could flatline at these levels.
And Huang described the current environment that we're in as, quote, the age of AI in full steam. What's your interpretation of that? And what sets Nvidia apart in fueling this revolution? And how does it sustain that leadership position?
Yeah, we are in the age of AI, but one thing I would push back on is there's still not really any killer apps out there, much like we saw 20 years ago. So we're still, when the internet was dawning, so we're still waiting for some of these spending numbers to be justified by large firms. And that might be a challenge. You're already hearing grumblings from some in Wall Street about the amount being spent on data centers without the revenue, to back it up yet. But, that's the whole point of business investment. As far as, where we go from here, that's going to depend on a lot of moving pieces. We could be entering a world of tariffs. I think the market may be ignoring some greater potential bans out of China, even though Nvidia has decreased their exposure to that market. China is still gobbling up those Hopper chips that they're allowed to buy. So there's a lot of moving pieces and some risks investors might be ignoring.
And then given those challenges for investors, can the momentum continue or should they be looking elsewhere at this point? It's been such a cash cow for so many.
Yeah, I mean, at these levels, I'd tell investors to look somewhere else. There's over 3,000 other stocks out there. I'd prefer not to buy one that's gone this parabolic.